Hey everybody. So we're going to wait 3 minutes until everybody manages to join us. Um, yeah, why don't we give everybody about 3 minutes and I will be right there with you. Okay? All right. So why don't we start? And well, yeah, we're going to start, and well, people can join us throughout the show. I don't know if this is going to be a short show. Let me just cut the music. Just for information, this is what I listen to when I'm working. It's excellent. It's my recommendation for you for today. I don't know if this is going to be a long show or a short show. It all depends on whether my mouse hand actually doesn't hurt. So I'm going to go ahead and um, start the show. So yesterday we had yesterday we had the news on Nancy Pelosi. She's the House of Representatives Speaker. She said that they were starting a formal impeachment inquiry against President Trump. Finally, because of the claims that the whistleblower made about him um, threatening the president of Ukraine of withholding $400 million on military aid to Ukraine unless the president of Ukraine opened a formal investigation against Democratic frontrunner Joe Biden and his son. And that is criminal behavior. All right, so well, little to no reaction to on the U.S. dollar. Yesterday, the S&P 500 closed at at daily lows. And right now, what we're going to be doing is we're going to go through the news, my news terminal. Nothing very much on Brexit. Apparently, they're going to have. UK Attorney General Cox says the government will comply with the ban law on delaying Brexit. Again, the bad news for the UK. I saw about UK Attorney General Cox says election could be called using one line bill. Of course, Trump tweeting on self-defense. We have crude oil inventories later today, but let's go ahead and start this show with the US dollar, shall we? So we're going to go ahead and have a look at the US dollar currency index, okay? This is what we do here. We always look at the US dollar, guys, because the US dollar is king when trading currencies. And because we are very heavily involved in gold, we also have to track the US dollar because big moves on the US dollar tend to have contrary repercussions in the price of gold. So let's start by looking at the US dollar. And remember, if you're joining us from social media or from the Daily Edge newsletter, welcome. Well, I'm leaving you a link below to try our premium community where I share my trade levels and up-to-date news and analysis for just $25 the first month, guys. I mean, the choice is yours. The link is below this video. Now let's move on and let's look at the US dollar currency index. Now, if you follow the show, you know that the 98.80 level is a big historic level for me. Not only is a big historic level, but this is where sellers jumped in well, countless times. You can see it right here again, and right here again another. But if you notice, I mean, the dips after testing the 98.80 have been shorter and shorter. And right now we are in what seems to be a flat triangle, all right? And flat triangles tend to be continuation patterns. So we are looking at a very strong move in the US dollar to the upside, maybe to test the previous highs at around the 99.40 level, or the 161.8% retracement of the last move down. Remember, this is the 161% retracement of this move, all right? This is the retracement that we were talking about. And if we manage to break above the 98.80 and hold the support, it's very possible that we're going to be testing this zone. That means that we are looking at a bullish continuation in gold, and gold in the US dollar, which happens to be very interesting given the fact that, or given the levels that we are going to be looking at: gold, the GBPUSD, the EURJPY, etc. But yes, the retracements from the 98.80 are shorter and shorter. So and with this or look at where the US dollar opened. The US dollar, with the news of the impeachment, the US dollar opened with a gap up, and we are moving up. Okay, so that this is very good for the US dollar. We are going to see how we react to the 98.80. The immediate resistance level has been broken with, but that doesn't mean anything. The true level that we are looking at is the 98.80. And if we manage to hold this level, where we are going to be at least testing that 99.40. If you have any questions, the chat is on my right screen. I'm always looking at it. Just post your questions there or type your questions on the chat right here. Questions here. And I'm going to I'm going to get to them once we get once you type them. All right, so our bias is bullish on the US dollar above the 98.80. Immediate bullishness after that impeachment announcement, and we're going to see what happens once we actually test that 98.80. All right, so basically this is where we are at with the US dollar, with an immediate bullish bias. Okay, so why don't we have a look at where gold is trading at right now? Well, gold is it's very interesting what's going on with gold, so we are going to be having a good look at it. If you look closely, the 1530 is my historic level. If you don't know, if you're new to the show, my yellow lines are key levels, red lines are historic levels, and green lines are immediate levels of support and resistance. All right, so we have here a very important level, the 1530 level again. And I said again because this is where sellers jumped in when we first hit it. And when I see this price action, I see it as a fake out too. All right, we managed to break above, we tested it, but then sellers came in. Sellers came in and we went down again. I'm going to change this to a nice white color, and I don't know if I can make it thicker, but well, that's fine. So all of these price action above the 1530 level for me is just a fake out. And if you look at this, and this is something that you might enjoy looking at it, but I don't trade head and shoulders. This can be an actual head and shoulder formation for the entire move to the upside. All right. So heads up to a negative. Or a dip in prices in gold. All right. Now the thing is that because of our immediate bullish bias in the US dollar, we are looking at an immediate bearish setup on gold. And this is very important. Well, this test at the 1534 level, which is these highs and these lows. All right, the 161.8% retracement of the last move down, which are bullish targets, are very interesting to us because this is where we are going to be looking to short gold. Now, we don't know. I'm sorry about that. We don't know if this is going to be just a retracement back to the previous broken level for a continuation higher, or is it going to be a final break below our key level or our make it or break it level at the 1485? Now, if you don't know me, or if this is the first time on my show, you know that the 1485 level is my make it or break it. Now, we don't know if this is going to be a retracement back to the 1509 and a continuation, or a break below that level for a final break below and a bearish marketing goal. We don't know that, but we can say with some kind of certainty is that it's very plausible that we are going to be deep into that 1509 level. Now, this is what I'm looking at in gold. Very noticeable also to say that we are trading inside of a rising wedge, which is a reversal pattern, and we have and if I thicken my chart out, you can see that we've had a very bearish reaction to our key level. All right, very bearish reaction right here to the 1533 level, which led us to believe that the probability for a immediate reversal is there. All right, now this is what I'm looking at in gold. Let's have a look at what has happened with the GBPUSD. All right, now the GBPUSD, well, we were looking at a possibility of a short position in the GBPUSD. And again, let me see. I have a few questions. Just stumbled on your channel. Is this a daily thing or a one-off? I go live every single day. If you're new, just well, I'm leaving you a link below where you can subscribe to my newsletter called The Daily Edge, and I will send you an email every time I go live. And well, if you're new and you want my key levels, my trade levels, my trade ideas, etc., I'm leaving you a link below so you can try our premium community for only 25 bucks a month. Also, don't forget to subscribe to this channel to get notified, and click on the notification bell to get notified every time I go live. So this is the GBPUSD. Now, let me just zoom into my chart because the level that I was looking at for a real short opportunity was actually that 25.70.71 level, which is my red line, and it is this very thick area right here. But I did want it for at least a test of this trend line before we go lower. Sadly, we didn't get there. But we managed to hit some very, very interesting levels on the way. All right, the 61.8%. I'm sorry, the 76.4% retracement of the last leg down, which means that this was a great opportunity to sell the pound against the US dollar. The thing is that with the traders that I talk to on a daily basis, they all were very skeptical because of the Brexit news out of the UK. But the thing is that and I'm going to show you what happened on a position that I'm currently in right now. I'm currently in on a short position on the GBP versus the Japanese yen, where I entered at this level right here, around the 135.25 level. So I'm going to go to the 1 hour chart. And I'm going to show you where I enter at. So before I move and go any further, let me just delete this. And I enter around this level right here when we broke with this low. No, actually, I entered, I don't know, somewhere right here. And then the news came out of the EU that they were close to they were close to a deal and the pound started to rally. But because I put my stop losses below the previous actual low, my stop losses were around the 135.95, 136 level, so I didn't get stopped out. And now I'm in the money for around 230 pips, and I am looking at taking out some at the 131. Remember that I swing trade. I don't day trade. I hate day trading. The future of trading is swing trading, and that is where you actually make the most of your money. I mean, that is where you create wealth. Swing trading, with short. I mean, when you swing trade, you use a lower or smaller position sizes, which is better because you manage better your risk. All right, and I mean, it's all about patience, and I can teach you how to do that, but only if you subscribe to my premium services, because nothing in this life is free, guys. But yeah, I mean, I am in this short position on the GBP, on the pound yen, and the reason that I wanted to show you this is because I mean, this pair is now very influenced by the political environment in the UK. Every news about Brexit is going to positively or negatively impact any pound pairs. But the thing is that if we go to my red box, I mean, you can see that by what we have read, okay, UK Attorney General Cole says there is a question about what the Ben law obligates the government to do. The Ben law is about delaying Brexit, etc., etc., etc. This is, I mean, this is sounding very, very bad for a when the deadline comes on October the 31st. My bias is short on the pound on the midterm. And this is where I am at right now with the GBP or the pound yen. Now, let's move forward and let me see. We have been missing you, Orlando. David Nagro, thank you, man. Me too, but I mean, if you didn't know, on Sunday I had an accident and I had to have surgery on my right hand. So my right hand was immobilized and very much in pain because I mean, I had like 7 stitches and a little skin graft. Yeah, I was in a lot of pain. I'm still in a little bit of pain, but nothing unmanageable. So here I am. Now let's move on and let's have a look at what's going on in other markets, shall we? But thank you for the nice words, David. We'll be here every single day of the week. Now, another position that I am in right now is a very slow moving position, and it's this short position on the Euro Japanese yen. I got a short here and another one here on the Euro yen. I already got some profits on. This is a much smaller position that I mean, this is a much smaller position than the one in the pound yen. I think I risk about 0.3% on this position, and on the pound yen I risk about 0.6. In any case, this is a big level on the Euro Japanese yen, and this is why I wanted to show you this, is because I mean this is where buyers have been stepping in on the pound yen. This is where buyers stepped in on the pound yen after this big flush, all right, and then we had a lot of buyers. I mean, but you all remember that this was because of the ECB rate cut. All right. Now and right here we've encountered buyers again, and once more right here. So basically, what I wanted to tell you is, even though I'm short in this currency pair, even though I'm short in this currency pair, because we are hitting this level, this massive level, what I'm going to be doing is I'm going to be putting on a buy stop above this high with stop loss above here, and I'm going to move my stop losses on my short position here. This is called hedging. And the reason that I'm going to be doing this is just a second, please, guys. Just a second. Just a second. All right, so this is called hedging. All right, and even though I'm short, biased on the euro yen, because we have hit this level twice already, and we've encountered buyers, I am going to be putting a buy stop at this level right here. All right, now and I'm going to move my stop losses on my short position to this level. Now what this does is that if price moves above my buy stop, it's going to hit my stop losses, and it's going to take me out at a win, at a small win, but at a win. But I will be securing a long position already. And if that doesn't happen, then I'm going to continue with my short position and eliminate my buy stop. This is called hedging. This is called protecting your winnings. All right. Because I don't want to close my short position yet, I am going to risk the same amount that I'm risking right now on my short position, so that if price moves to the upside, then I'm going to be equally compensated for a long position, as I am as I am losing winnings on the short side. All right. So my winnings are going to stay the same until my stop loss hits. So this is my view on the euro yen. Let's continue. Let's move on. Well, let's have a look at crude, shall we? But I am going to eliminate that very no, that's the New Zealand dollar, US dollar. This is crude oil, and this is something else. All right, so this is the 15-minute chart on crude oil. Let's have a look at the hourly, shall we? We have crude oil inventories today, guys. I think yeah, we do have crude oil inventories today. We haven't had it yet. There has been some news around crude, and right now I'm going to go through my news terminal, and it's all about the sanctions to Iran, and we're depriving Iran of $15 billion a year, etc. But that has been, very bearish for crude. And what I'm looking for is a retest. Now, this is the overall. Well, this is the overall structure on crude. All right. So what I'm looking for is a retest of the 54.78 to 54.50 level, and that bullish structure. All right, this is what I'm looking for a buy opportunity in crude. Now we're going to have to be patient, and because we have crude oil inventories today, we might not even. If the inventories are lower than expected, where the price in crude is going to rally, and if they are higher than expected, it's going to dip. And because we are so close, we might dip below that level. We don't know yet. We're going to have a look at it when we when or later today, but this is the actual level that I'm looking for a buying crude. If you want to get my key levels up to to the second, or if you want to get my trade levels, my trade ideas, and premium only technical analysis, and of course access to me directly, I'm leaving you a link below this video so you can try us out. It's called the Premium Forex Community for just $25 a month. For the first month, and then it's only $50 a month if you decide to join us for good. So this is the level in crude oil, and we're going to have a fast look at the Aussie USD, guys, because my hand is killing me. But we're going to finish off with some APAC currency pairs. All right, so let's have a look here. And the Aussie US dollar, we had a great setup to sell the Aussie US dollar right here. 50% retracement of the entire move to the upside, and 161% retracement of the last leg up. So very key levels were hit here, and very important historic levels at the 68, 70, 72, 70, 72 level. Very good short that we took here, and right now we are hitting a very strong level of support, historic level of support at the 67.47. But the true level that we want to get hit is this one right here, the 67, for a buy opportunity. When and if we hit the 67 level, and I'm going to be putting on an alert here, we are going to look for a long opportunity on the Aussie USD. For the time being, we remain flat on this currency pair. If you have any questions, just type them on the chat, and I will be more than happy to go through them once I see them. Guys, remember that this must be an interactive show. We're here to learn, and of course, you're here to exploit my edge, so you can exploit it too with your trading. And again, if you want to join us on our premium community for only 25 bucks, I'm leaving you a link below so you can do so. Now, this was a missed opportunity that we had here on the Euro Aussie. Sadly, because I've been away these couple of days because of my accident on Sunday, I did miss this great buy opportunity in the Aussie, the Euro Aussie. Now this is what I called a textbook Orlando setup. Now we had a rally, and I can bet you that this is a 161.8% retracement of some sort. Let's have a look. Almost there. But again, around the 161.8% retracement. But the thing is that we retrace back to some key levels. All right. Now I'm going to share with you this because this is a textbook Orlando setup right here that we missed sadly because I've been away these couple of days. So we had a rally, and then we retrace back. Now this is not the only thing that I want to talk to you about. We had a rally to some key level, and this is the step number one. Did we stop at a key level? Yes, we did. Sellers stepped in at this key level. 2, we started to retrace inside of a pennant or a triangle, whatever you want to call it, a flag. Yes, we did. Check. 3, did we retrace back to a key level? Yes, we did. We retraced back to an immediate level of resistance, trend support. 4, did we reject that level? Yes, we did reject that level. Boom. That is to me a key, a textbook long opportunity on this currency pair. And if you notice, my risk would have been around 69 pips for a first target of 95 pips and a second target of about 300 pips. So yeah, that one hurts, but I mean, we're not going to cry over spilled milk. And because we are not results oriented here, which means that if we miss a setup, then we miss a setup. There's going to be more setups around the corner. The only thing that I can say is that I am glad to whoever took it. So again, if you're joining us via our premium subscription or social media, I am leaving you a link below this video where you can test the premium forex community at Tradimo for just $25, guys. That's nothing. And if you for a month, you can try us out for a month for only 25 bucks. And if you decide that it's worth it, you can stay with us for only 50 bucks a month, where you can get my signals, my premium analysis, and your direct access to me during my trading sessions. So once again, this has been the daily edge. I do this every single day, so don't forget to subscribe to this channel. I will be back tomorrow, hopefully for a longer show. But right now I have to go because my hand really hurts. But again, guys, thank you for joining me, and goodbye.